Marcus, thanks very much for joining us. It would be good to get, I guess, your take, particularly on the macro picture now, and what we should expect for 2024 as well.
I think if we look at the macro picture, what I mentioned in the presentation, it's not so much about the level of interest rates, because that is a level we have seen 10, 15 years ago already. It's the dynamic of the last 12, 18 months that's challenging the industry. And it is that we are coming from 5, 8 years of ultra low interest rates, where people got used to that level of interest rates. And they have to readapt again to an environment that I would say a lot of people in the industry haven't seen before. And this is what the outlook will definitely shape going forward. And if we look at what the Fed said yesterday, that there are possibilities of interest declines in 24, that might possibly mitigate some of the challenges, but we are not returning to anything that is ultra low as we have seen before the war started. So I think it is a different environment. It's much more about fundamentals. On that side, it's a good thing. It's actually we are going back to basics. We have to relearn real estate in the traditional sense.
There's a view, obviously, that because bond yields have gone up and therefore there's less of a focus for investors on potentially real estate investments and putting capital towards that. What's your take on that?
I think real estate still has a role in any multi-asset portfolio, because if you look at a traditional 60-40 portfolio, if you want to diversify, you need some kind of alternatives, and real estate is a central element of these alternatives. So there is definitely a future role, but we will see possibly less investors targeting real estate, because these ultra low interest rates attracted investors to real estate that were not purely going for real estate, they were going for a cash flow, possibly a leveraged cash flow. And this type of investors, they will not return for the coming years, and therefore the volumes will go down, but they will be much more driven by the fundamental and analyzing typical real estate investors that take real estate as a diversifier, as a stabilizer, as an investment that secures a stable income stream with some kind of inflation protection.
When you're looking at real estate, when you're looking at the sectors, is there anything about the trends that you're seeing that suggests some sectors will outperform others? What's your take on that?
I think if you look at every real estate in itself is needed. It's just a question of the quality and the location that will be much more pronounced going forward. We still need offices, but possibly not all offices and not in all locations. So there will be some challenges and others will thrive. Then if you look at urbanization as one of the driving megatrends, we continue to see a need for residential, and that is definitely one of the sectors that fundamentally looks brilliant. Nevertheless, it's diversifying. We see a lot of operational elements, a lot of alternative elements coming to the market, and that will mature going forward. It will be a very interesting element. Logistics will be a place where investors will stay. It's higher yielding. It's driven by nearshoring, friendshoring, or whatever you might call it, and also the realization that just-in-time delivery is possibly a challenge if you cannot control the supply chains to the complete extent. So there will be the traditional beds and sheds alternative. But I also believe that there are opportunities in retail. We have the food anchored, we have things like outlet centers. So there is definitely also an area where we shouldn't write retail off, although it's still in a challenging environment. But it's something I would definitely have a look at in 24.
Great, really interesting to catch up. Thanks very much, Marcus.
Thanks, Richard.